I-bond has been a great instrument for hedging against inflation. However, with inflation coming down and stock market picking up in 2023, the investor are still wondering, is investing in I-bonds still worth it, and what are the ways to maximize your return on them in 2023? So therefore, I'm going to walk you through my analysis, suggestions, including way that guarantees at least 10x returns. So please stay tuned till the end of this video. Before going into the details of I-bonds, I would like to take all of you back to 2020. Yes, pandemic. During the pandemic, Federal Reserve kept the interest rate low. They also printed a lot of money to allow consumer to borrow that cheap money, and which then in turn can stimulate the economy. But that also led to higher inflation, since interest rate and inflation are inversely related. Okay, now that you understood how the inflation got picked up in 2020, but it actually only peaked in 2022, as you can see in this graph where it clearly shows peak in 2022. So until that point, even if you see in this chart on the right hand side, the S&P 500 was really doing good until 2022. It's only when the inflation hit its peak, the market went south, and investors were looking for various options to hedge and protect against the rising inflation and declining stock market. So, I-savings bond got a lot of investor attention in 2022 or later part of 2021, and many have bought them due to their attractive yield, because I-bond interest rate has two portions. One is fixed and inflation rate. So inflation rate depends on how inflation is in the economy, in the US economy at least. And so therefore it provides that good hedge against the inflation. So to curtail the inflation, Federal Reserve has been tightening the monetary policy, basically increasing the interest rate since early part of 2021. And so far, they have increased the interest rate as of February 2023, they have increased up to 4.75%. So this is the meeting where Jerome Powell, the Fed chairman, has increased the interest rate by 25 basis points. And he highlighted in this meeting, in this, they see that increase in interest rate is appropriate, and they need a substantially more evidence to be confident that inflation is on a sustained path. Now, you can see this is the latest CPI, and you can see the month over month the inflation has picked up. As you can see clearly, in December it was 0.1%. Now in January 2023 it's 0.5. But if you can see the year over year change is somewhat relieving, that the inflation has come down since last year January from 7.5 to now 6.4. To say that in 2023 inflation is still sticky. So you can see that clearly from the grocery price, right? If you go to the grocery shop, the food prices have not come down substantially. The egg prices are still very high. So combined with in the gas prices, which are still very high in most of the states, as you can see in this tweet from GasBuddy, where they say the average gas prices for last month alone has increased to 10%, and it stands around average is around $3.49 per gallon, and they feel that it is going to reach $4 again, and it's more. And it looks like the more increases are on the way. So this is as of Jan 30th, 2023. So that kind of these two facts combined concludes that the inflation is still not going away anytime soon, that as people think. So on one end, you see the year over year inflation is decreasing, but when you go to grocery or when you go for gas, the prices are not coming down. So it's kind of contradicting in the sense people are now confused. Is it still a good time to go and invest I-bonds in 2023? And not only that, they also not sure how to maximize their return on I-bonds. Okay, so is I-bond still relevant in 2023? To answer this question, I'm going to talk about 3 key facts which would give you that understanding. So the first half is the January CPI data that we saw earlier that clearly shows that month over month the inflation is increasing. So therefore, even though the yearly CPI data is coming down, but it's not coming down drastically as one would want. Therefore, as predicted by US Federal Reserve, inflation will be there for larger part of 2023 and inflation is going to be sticky. So that's number one. The second one is Federal Reserve therefore will not ease the monetary policy because they want to bring the inflation down to the 2% target, right? And also not to mention that unemployment are at all-time low. Therefore, this also means that the stock market is going to be choppy because as the Federal Reserve increased the rate, you saw last few years, last year at least, the market was down. So it's going to be choppy. Therefore, the investors doesn't have much in terms of alternative. So therefore, I still believe I bonds are a viable option for 2023. And the inflation rate won't, since the inflation is not going away anytime soon, therefore the inflation rate would not drastically reduce. Before I explain how to maximize your ROI on iBonds, I want to let you know that this strategy does not provide a way to double down on the 10K max in a single year. This is very important, guys. Please keep in mind. But what it does, it proposes a strategy which may increase overall returns short and long. As simple as that. So now let me show you how to maximize it. So for example, I'm going to consider a family of 4, like a husband and wife, and they have beautiful kids, 2 kids. So first thing is like each of those 4 family member can buy $10,000 worth of iBonds for each of them. And the top of it, they can have like husband and wife can have $5,000 as tax fund, which they can put towards iBonds. So that gets to a maximum amount of 50,000, right? Now, the second part, this is what people don't know. Some people know, some people don't know. And this is the best option to maximize your saving, ROI on iBonds. So which is the gift saving option. So basically, what is gift saving? The idea is to gift iBonds to the family member at the present rate. So let's say today, if you go and buy the iBonds, which is at 6.89%, so you basically lock that rate. You don't know what's going to happen like in April 2023, but that's fine. But at least you will lock the rate as of today. So you reap that benefit. Only caveat is since you already bought the 10,000 worth of bonds for this year, you can only receive this gift bond on the year when you're not buying that 10K, and perhaps that is the way you can maximize your return. Okay, you in my example, I'm considering 4. Therefore, each person can buy 30,000 worth of iBonds to gift each of the other 3 family members. So that gets to 120,000 worth of gift iBonds. You have that 50,000 as a regular option for the family of 4, and then each of them gift each other for another $120,000 worth of iBonds. The inflation is going to be sticky, so I feel roughly you would get anywhere between 6 to 6.5 return on that 170K. When the markets are choppy, I believe this is the best option one could ever imagine of. Because I believe that iBond is still a good strategy, and by gifting your family members, you can lock down that rate. This way you can maximize your return. So I hope you like this video, and I hope it add value to your portfolio and your life. If you like this video, please subscribe to my channel and click the like button, and comment for what you feel. Please comment for what can I improve. Any suggestion is appreciated. Thanks a lot for watching. I appreciate your time. See you next time.